G'day folks, welcome back to the weekend of the 20th of July 2024. This is the market update for the S&P, the NASDAQ, the JapanNikkei and the GermanDax. They've all dropped and they're all showing bearish momentum, at least on the daily time frame, and a few of them on the weekly as well. This is our heat map, and as you can see there on the bottom left, we've got still predominantly bullish on the monthly trends, and we use the CCI 150 as a trend indicator, and I'll go through that in the description of the technical analysis in a minute. Starting to turn predominantly bearish on the weekly and the daily time frames for those world markets. I've also got some other instruments there for your reference if you wish to trade on them separately. Before we get stuck in the charts, make sure you hit that like and subscribe button and that notification bell, and support us more on the Patreon page where we look at weekly bullish shares on the world market as well. So let's first start with the S&P 500. So what the monthly, the weekly and the daily here, and you can see here on the monthly, the CCI 150 is broken above the moving averages, giving us a bullish signal, and likewise the price is above its respective moving averages. There still is a bearish divergence there on the CCI 150 on the monthly, so that's been going on for a couple of years now, and we've got higher highs on the price, so that's a bearish divergence. On the weekly as well, we've got another bearish divergence between, you can see there, slightly lower highs on the CCI versus higher highs on the price. So that's been happening also for a few years now. Now on the daily, it's hit this resistance at 56.67 and it's bounced down from there. You can see they've got a bearish movement as well on the CCI 150. It's broken to the downside, and there is, you could probably see that's also a bearish divergence there between that peak on the CCI versus that high, versus higher highs on the price. So I won't draw the lines for it, but you can see there quite clearly. Let me just blow this up. So if I was to draw a Fibonacci between that low, and assuming it continues to drop, we're going to expect the minimum retrace to come down to that level there, between the 23 and the 38% level. So, more than 90% of the time it hits this target area between the 23 and 38%, and sometimes it drops a lot further. It could actually drop even below the 61%, which would be a major area to look out for. But first it's got to meet this area, this minimum retrace, to be more bearish, I guess. So that, again, early days, we're not going to project too much too soon yet. Just delete that, make it a bit clearer. If we go to the hourly chart, we've got the daily here as a reference. Again, remember the trading strategy is we only trade in the direction of the higher time frame. So at the moment you can see that it's broken below the moving averages, so we only take short trades, and you would have taken short trades from this period here when it broke below on the daily. So that would have been a nice little trade to take, and you close the trade when it enters the CCI, enters the moving averages. So you could have taken it there, and that also aligned with breaking to the moving averages there. They don't always align, but in this case they did. Enter another entry and close it out at that point there. Now you'll notice here on that 1 hour chart, we do also have another bullish divergence. So you might see a bit of a bounce. Let's take it from that point there. We might see a bit of a bounce from this point. Notice it's consolidating there the last few hours of trade. So I might see it bounce, and if it does bounce, assuming it does bounce, it could also continue to drop, of course, but assuming it does bounce, we're going to draw a Fibonacci line between that point to that high, and that'll be the minimum retrace level. Now, I don't trade these divergences, just want to be very clear. I'm just telling you where it may retrace, and then we look for an opportunity to enter again short. Remember, we only trade in the direction of the daily. So in this case, we're going short only until the daily breaks higher than the moving averages, in which case we start taking long trades. So go back a bit. So if you go back to the 2nd of July, so let's go back to the 2nd of July. During that period where the CCI was higher than moving averages, you would have taken those long trades. And I've got arrows marked there where you would have taken entries going long, stop, a bit of a break even or a small loss there. Another long entry there, stop, long, stop, and then again, a couple of false breaks maybe, then going long, stop, and then it started to turn. So again, only trade in the direction of the higher time frame. For the GermanDax, still bullish on the monthly, and also we've got this bearish divergence, you'll notice, longer term versus higher highs in the price. That's been relentless. It's been going on for many years, but we always respect that. It doesn't mean we stop trading long. It just means we've got to be careful that at some point this is going to turn down. Most of the time, as I said, the CCI trends in the same trend as the price chart. And when you see this divergence between these peaks, they just got to be wary of that. So longer term, it's showing a bearish divergence. On the weekly, another bearish divergence there. We've had a couple of smaller divergences. You can see there it hit our target area, bounced perfectly off it, and it bounced higher. Now we've got a secondary longer term bearish divergence on the weekly. And on the daily, it's hit this resistance up there. It hit it once, it came close to hitting it twice. Let me just blow this up. At 18,936, and it's actually retracing back down just short of that as well. But you'll notice on the daily it's going short. Now, if you're trading on the daily time frame, you could have taken short trades on the daily based on the weekly trend. You can see the weekly's broken below, so you could again trade on the daily time frame based on the weekly trend. Remember, always trade in the direction of the higher time frame. So if we go to the 1 hour chart, again using the daily as a reference, taking short trades only, and that would have been from that point there, taking a short trade, close out the position, take another short trade, and you'd still probably be in the trade if you're following the price chart with those moving averages. Or if you want to be really conservative, close it out when you see it break into the moving averages of the CCI 150. But at the moment, there's no sign yet. We've got, looking at the daily, that's our next level of support, minor support at 17,949. And we need to see how it goes, if it breaks below that or not. The Japanese Nikkei, again, bullish on the monthly. There is no divergence on the Nikkei on this one, on the monthly. On the weekly, you can see there we had lower highs on the CCI over a few years, bearish divergence versus high highs in the price, and I've drawn this Fibonacci previously, and that's our initial target area, and if it keeps dropping, that'll be our initial target retrace level. And of course, as I said, 90% of the time it hits that target area. Of course, it could fail, it could keep rising, and just to invalidate the divergence, we need to see the CCI rise higher than that point, in which case it will invalidate the CCI, the bearish divergence. But at the moment, that's our intermediate term range of a pullback for the Nikkei. On the daily, again, we've got another bearish divergence. And by the way, these divergences are not always aligned with the higher time frame. So you can see there, that high there is equivalent to that peak there on the CCI on the weekly. So they don't align. So you can see if I zoom out, going back, it doesn't go back any further, but 2023, you can see there that was moving in line with the price, that little section there, and this was moving in line with the price until that point there. We've got a bearish divergence on the daily. Now again, I've drawn a target area there, so that would have been from the Fibonacci low from that point up to that high, and that's, you can see there's just stopped short of it, and it still looks like it's free falling lower at the moment. It's still going lower with the CCI, and it looks like it's going to hit this target area in the next couple of days possibly. Going to the hourly chart, again trading in the direction of the daily only. That's our daily chart. So you would have gone short from that point there, consolidated there for a few hours, but then it finally broke through. And that's where you would have entered your short entry, and you would have closed it out when it broke into the CCI, if you want to be conservative, into that point there. Then a couple of extra small short trades would have been materialized there as well. Now notice as well, we've got a bullish divergence here versus lower lows on the price. Again, we expect that to rise. Now, in terms of drawing a retrace level, again, we don't trade the divergence. We look at just as a potential retrace. That'll be our initial target area between that 23 and 38% level. Lastly, look at the NASDAQ. Now on the monthly, it's still in a bullish momentum with the CCI above its moving average. But again, I've got this Fibonacci drawn. Notice we've got a bearish divergence on the CCI, lower highs versus higher highs on the price. And I've drawn a target area between the 23 and 38% level there on the monthly. Again, that's very long term, so this could take some time to play out if in fact it starts to retrace from where it is now. On the weekly, we've got another bearish divergence between that point there and that high, and that's also got a target area drawn. And on the daily as well, that by the way is a bearish trend with the CCI broken into that moving average range. And on the daily, it's also bearish, and you can see there it's already hit our target, and that would have been, again, drawing the Fibonacci just to demonstrate for those new to the channel. Between that recent low to that high, the Fibonacci was at 38% level. You can see that it's resting in there at the moment, and the CCI is still falling. No sign yet of a retrace to the upside, so we may see it break out lower than this 38% level of a retrace. So going to the 1 hour chart, if you're trading on the intraday, we only take short trades based on the daily trend from the 11th of July. So from back that point there, that would have been a nice little entry to make if you anticipated that. Consolidated sideways for a while. Now you would have possibly entered a short trade there, but that would have been a false break. Notice also, ideally you want to wait for the price moving averages to also break to the downside. So ideally you want to wait to somewhere along this area here where it starts breaking below. But the other thing to look out for as well, just a bit of a tip, I like seeing these moving average bands in a wide pattern like this. You can see there it's quite wide there, then it breaks down quite suddenly, it's still wide. I try to sort of be careful or cautious or even avoid trading when you see this band being very thin. It's thin there on the price chart, and it's also quite thin on the CCI as well. Until at some point, like here for example, that would have been a safer area to go short. You can see that it starts widening. So when you see the moving average bands widen, that's a lot more confidence in terms of a decline in this case. Now again with the divergence, we've got a bullish divergence here versus lower lows on the price. Hasn't started to retrace yet. This could still fall further. But again, just be careful. I'm not going to project. You can see it'll be roughly around this area. If it starts pulling back from that where it is at the moment, it'll about 38% will be there. I want to see it break a lot higher before I get any confidence about a retrace to that level. So that's where we're at the moment. Hope you got value out of the video. Hit that like and subscribe button. Support us more on the Patreon page where we look at weekly bullish shares on the world markets. Thanks for watching and see you in a future video.